Frank today. I'm with Chaffe Associates in New Orleans. Thanks for inviting me on. We're investment bankers. I primarily do sell-side mergers and acquisition, and we do a lot of valuation work. So my part of the presentation is going to be sort of the market's reaction to what these guys have been talking about. And there's going to, since some of the slides are similar, I think we can move through quickly here. Oh, sorry. Unless I'm getting the wrong way. There we are. So obviously, you know, we're talking about an industry that's been in a transition. And so we're talking about the sector's performance in the market, the challenges to and from growth, the capital expenditures that are anticipated, leverage, and the cost of debt that this group is going to be facing, and a little selected M&A, and just a brief about some subsectors of this industry with tailwinds. So as you can see, the investor sentiment's not so great. The telecom portion of the S&P 500, while it, on a year-to-date, is about 5% above where it began, still below S&P at 8%. The multiples, and here I'm showing a PE multiple, is lower. And typically, in the past, it's been higher, and that's been driven by the perception of this group of companies as high growth profiles, and also with a little, added bonus of getting dividends. There's some things that are underpinning the investor sentiment that's going along with some headwinds that's causing people to pull back and rethink the way they value these companies. So some of the trends. First of all, as we discussed, or they discussed, market saturation. My wife actually teaches yoga at a senior center, and sometimes when she has to change the schedules, we'll have some seniors that are in their 80s and 90s pulling out their smartphones and addressing it on their schedules. So I think we're getting to the point now where the late adopters are actually adopting. And that's, so there's going to be a whole lot of growth there, at least I don't think. And then, subscribers, I think for the most part, we know that most of the country's connected with cell phones. About 50% of the country has a smartphone. So that trend is going to be hard to get more growth in revenue for these companies. Then we talked about the network. There's going to be a lot of CapEx required to support all this data, and some of it's going to be footed by these telecoms. The other factor here is leverage and is pricing pressure. That's one way. Okay. So I already talked about that. And this is sort of interesting to me. I found that only 12% of what we do on a cell phone is actually making the call. The rest of it's doing other things. So in order to support all this data, there's going to be a lot of CapEx required. And there's an 8% sort of growth year over year for the next foreseeable future, next 2 or 3 years, that's anticipated. The two big guys, AT&T and Verizon, are slated to spend in the neighborhood of $20 billion over the next couple of years. Well, I think $20 billion is their 14 guidance. So 20 and 18, respectively, AT&T, Verizon, and growing at an 8% clip. And so, there's pressure to, support all this content. And also, they're thinking of getting into the content business, as Lutao talked about, partnering up with people that provide more content. So they got a tiger by the tail, and who knows where this is going to wind up. But it's very interesting environment to be in, I believe. The other thing that has been a trend is the CapEx to sales ratio. That's been rising, it's been rising over the last several years, from 14% to 18%. I don't see that trend changing. It's going to be hard for the top line growth of these companies. There's a lot of headwinds that's going to prevent that, and the CapEx is just going to keep coming at them. Then there are going to be some other issues. The chart here is both of the guys shared, so growth in volume of data, lots. So as a sector, this company, these companies are sort of negatively correlated with yields in terms of valuation, because they have very low financial operating leverage and high financial leverage. And you can see these two charts. We're getting ready to enter an increasing yield or increasing interest rates over the next several years. And so the industry as a whole is going to have a hard time performing because of the CapEx requirements, the leverage that they're carrying, and the fact that they, that they have to continue to make all sorts of improvements in their asset base. This is one of the things that I thought was sort of interesting. Over the last 12 months, I just sort of picked a couple of deals here. And I think the one that's, to me, the most puzzling is AT&T and DirecTV. We were talking about this before the event. I don't see the synergies, and I don't think the market did either, because there wasn't a really big control premium associated with that merger, at least in my estimation, and certainly not what we've seen in the past. Now you can see that all these deals, they're sort of a mixed mash of different ways of financing them. It's not like other industries where there are tons of cash on the balance sheet. They can go make a bunch of acquisitions pretty easily by just writing a check. A lot of them have to go out into the markets and raise debt, and it's going to become more and more expensive, and their balance sheets are pretty flush with debt right now. The other thing is that they're going to be raising equity. That's going to be a problem for investors as well, because it's going to be a dilutive event. So this is going to be an industry that's going to have some headwinds to maintain its position going forward. The last two charts here, within the sector, there's a couple of subsectors that as you would imagine, are outperforming. Those are data centers and tower producers, and you can see based on their performance to the S&P, they're beating it. Data centers doing much better, and I think that this trend is probably going to continue. So as we move forward, I think that the periphery of what makes all this work, the towers, all the infrastructure, that's going to be the place where investment's going to happen and where growth is going to occur and where people are going to make a lot of money. And that's about it for me.